Hello, everyone. Thank you for joining us today for our Dynamics GP Copy Break. This month's topic is multi-currency usage and advanced revaluations. My name is Melissa, and I'm the facilitator today. If you have any questions during the presentation, please type them into the questions area in the control panel on the right-hand side of your screen, and we'll answer questions at the end. The session will be recorded and posted on our blog, as well as shared with you later this week. Now I'd like to introduce our presenter today, Don McNulty, who is a solutions architect on our Dynamics GP team at Encore. Don, over to you.
Thanks, Melissa. So today we're going to talk about multi-currency usage and advanced revaluations. I've been doing Great Plains for about 22 years or 23 years, I think it was, 1996. So that's almost 30 years. So what we're going to talk about today is how we set it up, how do we access it, and once we've got it all accessed, what does it do after the end of a period when we need to take a Canadian dollar account and turn it into a US dollar value so we know how much it is. So we'll be talking about exchange rates, we'll be talking about currencies and things like that. So what I'm going to do is I will get started here. So the first thing is, so we're going to talk about multi-currency setup. That's how we set up the currencies, how do we access them and things like that. The currency types, in other words, what kinds do we have and how we set those up so that we can differentiate them inside on the screens. We have to assign accounts because we have to assign GL codes in order to have gains and losses on foreign exchange. And then how do we change rates, and how do we allow people to change rates, or do we allow people to change rates? Then we'll talk about some revaluation techniques on how to revalue both permanent and temporary timing differences. There are both of those inside GP, and we'll talk about those as well. So that's kind of what we're after today. So I don't want to waste a lot of time just talking about it. It's much better to see it. So we will move on to the demo. So let me just flip this over. And I will stop sharing that. Okay, so this is standard Great Plains, as you can see here. So when we start, the first thing we have to do is we have to assign the currencies. So this is Fabricam, and when you go into Fabricam, you look at this, we have our password, so we get into here. So inside here, we have got a list of currencies. Now, the list of currencies all start with Zs. Now, ordinarily, what we want to do is we want to use the ISO codes. So when we first set up multi-currency, we want to use things like Canadian dollars. And the ISO code is CAD. And then the currency symbol. So depending on whether you're a Canadian-based company or a US-based company, you want to differentiate the dollar sign. So just putting a dollar sign on it, great, not a problem. The problem is that if you look at your books, you can't tell the difference between a US dollar with a dollar sign and a Canadian. So you don't know what you're looking at on the screen. So ordinarily what we do is we pick one to be the core, which is usually your functional currency. So if you're in Canada, the Canadian dollar would look like this. If you're in the United States, what you would do is that you would change this from dollar to C dollar so that you know that it's a Canadian dollar. That way this will show on the screen all the time so you can know which currency that you're entering in. I'm going to put C dollar. We're going to actually use the Z ones because that's what's been set up in my demo company. The Z one, Zs or Zs, depending on which side of the border you're from, those particular currencies that you see here, let me just save this. These ones down here, they are used by the sample company, and we like to keep them that way if we can. So if you're starting from scratch, we like to add this one. We add USD as well. So that's the first step, is to add the currency and to understand this currency symbol. Second step is that we need to have an exchange table to go with that. So when I go into my exchange tables, I have again a bunch with Zs. And what these are is their averages and buys and sells. I'm going to create a new one. So I'm going to create a new one. I'm going to go clear, and I'm going to call it CAD-USD and average. So we'll just go Canadian to USD average. Currency ID is going to be attached to my Canadian dollars, the one I just created. And how frequently do I change the rate? Do I change it weekly, monthly, semi-monthly, whatever it happens to be? Or I can put down none, in which case it does not expire, and therefore you can just put in a single rate and it will run for a number of periods. Calculation rate is, do you multiply this number or do you divide? In this case, I'm going to use multiply, so I'm going to be entering my exchange rates at 0.7 to 0.8. So in other words, right now, I think we're running at about a 73, 74 cent dollar. So therefore, it'll be 0.74 would be today's rate. So I multiply the Canadian by 0.74 to get me the US value. I could divide if I wanted to use 135 or 136 or whatever it happens to be. Do I use an exact date, a previous date, or the next date? This one is, personally, I like the previous date. So that means that if I enter in an exchange rate on the 1st of January, 2023 or 2026 or whatever date I happen to be working on, that exchange rate will be valid until I enter a new exchange rate sometime into the future. If the US and Canadian dollars are very stable and they don't change too much, you may not decide to change your exchange rate for up to a month. On the other hand, if there is some volatility there, you may decide to change it on a weekly basis. So we use previous date. If you use exact date, then you must have every single day of the year entered, okay? Unlimited look or limited look. Do I look how many days back do I look before I stop looking? That's what this is. So, and then we click on the rates. So we go rates. I save the exchange table, and there's my rates. I don't have a rate right now, so I'm going to go 0101, and I'm working in 2027, as you can see down in the bottom corner. That's because my Fabricam data is all dated in 2027. I'm going to put in midnight, and I'm going to put in 0.74. And I'm going to go insert. And then I'm going to say, well, in February, I'm going to use 0.75. And then in March, I'm going to use 0.72. And then in April, because I only have till April, I'm going to put in 0.75. Actually, let's go 0.74. 0.73 and make it different. Make sure I get my decimals right, and we go insert. So now I've got 4 exchange rates for this table, and I'm going to hit save. Now, because I'm going to be using the Z currencies, I'm going to actually go in here, and I'm going to check to make sure that my Canadian average, right here, the Zs, is set up correctly. So I've got 74, 75, 73, and 72. So as you can see, I've got 73 for January, 74 for January, and 75 for April. So I don't have a February or a March, but I could insert them if I wish to. This particular one expires, so I'm going to modify this one and make it not expire, like so, and we're going to go modify. So now we've just changed these so they don't expire. Expiration of these rates is so that you don't go back too far. Think about accounts payable. When you enter an accounts payable transaction, you put in the invoice date of the document. The document date could be last year if somebody had it on their desk for a year. So it is possible to go back and use those rates if you wish to. So we hit save. And then so that's the setup for the currencies. We hit save on this. We close this. And now we have to give access. So when I go to access, there's my new currency, and it's not accessible to any of my companies at this point. You'll see that it says there's the currency, and there's the exchange tables that I've added. When I click on this one here, and I click on this one here, it now gives me access to both of these inside the currency. This must be done at the system level. So these show all the different companies. So if I look at my Z Canadian, you'll see that both companies have been turned on for all 3 of the different ones. These 2 here are not available for the multi bin, which I will turn on. And now it's completely set up for the Canadian dollar. So this is ready to go at this point. So now that gives us the exchange tables that we need in order to do this. So that's the admin. So then the next thing happens is we have to go to setup in financial, and there's three pieces that we have to deal with here: multi-currency, rate types, and currency accounts under setup. So when I go to multi-currency, we set our functional currency. This functional currency can be set once and only once for a firm, can never be changed. If it needs to be changed, you must re-implement Great Plains from scratch and copy all the transactions across in a different exchange in a different currency. Down here, we have over here we have rate types. Average, buy, sell, or default out of the box. That's what GP comes with. You can add additional ones. I can just go demo, and I can add a demo. Just by adding in here allows me to add a new rate type ID. Okay. Now, down here we have our exchange rate options. This toggle right here is very important. It says use rates without adding to the table. So the table that I just entered all those exchange rates in, we may or may not want to have people change those rates when they do a transaction. And transactions that I'm talking about here are, for instance, a bank transfer. When I transfer money from a US account to a Canadian account, I phone the bank and say, please transfer 1,000 US to Canadian. And they will put, say, 130. So if I take 1,000 US, they'll put in $1,320 Canadian. But that rate that they use to get to the 1.32 is not necessarily going to be the same rate as what you have in your tables. You also don't necessarily want to use that rate on an ongoing basis. You only want to use it for that one transaction. If this is not toggled here, you will not be able to use that single rate for that one transaction. So for the bank rec alone, and for things like that, I always suggest doing this. I also suggest adding a password so that nobody does it by mistake. Password that I tend to use is FX, just for foreign exchange. And that way, whenever it pops up, I know that it's FX. So nice and simple. So we'll go OK. Now down here, we can default our transaction types to any one of the 4 transaction types that we've got up top here. And I'm going to put all my financials to average. I'm going to put all my sales to average. I'm going to put all my purchases to average. You could use buy and sell if you wish, so that you can have different exchange rates for AP versus those on your AR. So I'm going to go OK, and that sets this up perfectly. So we're good. Next thing is the rate types. So when I go into the rate types, I now go into here, and I need to be able to apply this. So all 4 rate types show over here, and I say, well, when I want to use this exchange rate, what rate type is it going to be attached to? Well, it says it's an average, so I'm going to insert the average. So now my average, if I use this currency, will be using this exchange rate. Now, there is a button here for accounts. And this allows you to have different profit and loss accounts for each exchange rate table that you use. So if you use a buy and a sell and an average, you can have 3 sets of foreign exchange gain and losses. Most people do not want that. They want it on the currency. I need to know how much my exchange gain and loss is in Canadian dollars versus British pounds versus euros. Okay, so there we are. So we will not be filling them in here, and you can also do it on the, and then this will bring up the rate table, that same rate table, just a different button to get to the same spot. When I hit save, that's fine. When I look at my Canadian average here, you'll see that it has average here. I could also assign demo there, so I could use the same exchange table for 2 different rate types if I desired. Again, same thing, those accounts are not filled in at this point. So we're going to hit save. I'm going to close this. So the next and the last piece on the setup is the currency accounts. So this is where I can select a currency, and I can put in my realized gain and realized loss on multi-currency transactions. Gains and losses are set there, and then down at the bottom I have rounding write-off and rounding difference. The way that most people do it is they do not need to fill in the offset accounts. The offset accounts allow you to push the differential when you do a revaluation to a separate account than the actual account that you're revaluing. Most people prefer to change the account that they're actually revaluing. So that's why we leave those. But we do need the 2 at the bottom. We do need the rounding write-off and the rounding difference. And a lot of people will put those to the realized gain or loss on foreign exchange, simply because what it is it's when the math doesn't work on a four-line journal entry or a three-line journal entry where the rounding makes it out by a penny, they have to put the penny someplace. Okay, so that's the multi-currency setup. We hit save and we can close this. So now we can go and take a look at the transactions. So we have to look at the account. So when I look at the account and I look at my Canadian bank account, which I've got here, my cash and bank, here it is here, it's a balance sheet, standard one. I have currency and analysis. So when I click on the currency button, against each account, I can assign whether or not I can use a specific currency. So I could select the Canadian and add it at this point here, or I could, and I've got the Canadian dollars already done here. This needs to be done for every account in the journal entry, which means that most of your P&L accounts, if you're doing purchasing in US dollars for a Canadian company or Canadian dollars for a US company, most of your purchase accounts are going to need to have this turned on. It's quite onerous to go through and check one by one. So underneath this, I'm going to hit save. So that's where we set that currency up. So that's how we set the currency up. There's also a there is a currency account update button inside here under cards. When we run this, we can specify which account, or I can specify all accounts, and I can click on the update currencies, and I can go and select the currency and say I want to update all my accounts so they can use the CAD. And all I do is just leave it like this. I hit update. It says, are you sure you want to do them all? And I go, yep. And it does them all. So that toggle has now been done on every single GL code in my system. Worth knowing because, of course, you could have thousands of GL codes that you would need to assign if you put in a brand new multi-currency. All right, so that sets my GL up. So at this point, I can now do transactions against the account, and I can look at transactions that I've got. So when I look at the summary inside here, like so, in April, because I'm dealing with April period 4, I've got $9,007.84. That is in US dollars. When I click on the currency, and we click on period balance because we want to see the period balance, you can see that I have $9,007 in US dollars. And over here with the C dollar sign, and this is where you want the dollar sign to be different so you can tell which one you're looking at, it says $12,754.94. So there's some transactions worth $12,000 in Canadian dollars. That's how much money I actually have in the bank at the beginning of the month. And it's currently on my books for $9,000. And that is this number here that you see, the average exchange rate, is just this 9,000 divided by 12,754. That gives me 0.706236. There is no entry in my system worth that exchange rate. This exchange, I answer this question more times than not. How come that exchange rate isn't in my tables? It's not from the tables. It's strictly a mathematical formula of the originating amount divided or multiplied by the functional amount based on the currency, based on whether you put divide. If I put in divide, it changes it to 1.4. Now we know that this is not a valid transaction, but we want to put some transactions in to take a look. So what happens? So we go, okay, so that's what we're trying to revalue. So at this point, we need to put some transactions in. And we need to talk about temporary and permanent timing differences. So when Great Plains does accounts payable, it puts transactions in at the rate of the invoice and takes them out at the rate of the check. The differential between those two will automatically create a gain and loss on foreign exchange. So that will be a self-correcting number as you move through your accounts payable control. So we put in some at 74, we take it out at 75. The 1 cent is then recognized as a FX gain and loss, and everyone's happy. At the end of the month, we have a balance in that account, and that balance needs to be revalued to the spot rate at the end of the month. And I did a multi-currency seminar about 2 years ago. We do have it online. It's part of this, and you'll get a link to it that goes through this in a little more detail. That's a temporary timing difference because the next month we're going to take those outstanding transactions in AP or AR, and we're going to pay them. And when we pay them, it's going to recognize the gain and loss based upon the original transaction amount. So that's a temporary timing difference. So when we do a revaluation, we will use that as a temporary one. Cash, on the other hand, is a permanent timing difference because when I put money into the bank account from accounts receivable, I put it in based upon my cash receipts. No problem. I receive my money. I'm good. When I pay it out using accounts payable, I take it out of accounts at the exchange rate. Those two exchange rates will not always be the same. But there is nothing inside GP that links the reduction in cash or the increase in cash to the corresponding decrease on the other side. So that means that it just fluctuates back and forth. And what that means is that we can make some very strange things happen without too much effort. So for instance, if I go into here and I do a journal entry, and I'm going to use my Z Canadian, and I go, I put $1 million in here, and I put in $1 million here. Now that's $1 million US. So if I go up to my view here, I can view this in currency. I can see it in originating. I've put in, let's put in $1 million Canadian. There we are. We put in $1 million in Canadian. So there it is there. So I've got this. If I flip back, you'll see that if I go back to my functional, you'll see that 750,000. And this is why it's important to put in those things, because you cannot tell the difference on the front screen. As you saw, I keyed in the million that way at this point. So this is $1 million going in, not a problem. And the exchange rate is attached to the arrow key. So inside here, I'm putting it in at 0.75. So I'm going to go OK. And I'm going to go post. No problem. Then I'm going to go back to, I'm going to go forward a couple of days, like so. And I'm going to take out $1 million because I go, oh, that was the wrong, it could have been the wrong GL code, or it could be something like that. I'm going to just remove it from the same place so that it just balances my, but at this point here, it still says 0.75. I'm going to change this from 0.75. I'm going to change it to 0.74. So I only changed it a penny. We go, okay. And this is where I can say I don't want to keep this exchange rate. I'm going to go continue. And this is where I type in my FX. And now I go, okay. So now when I look at this and I go to my view and I go to currency and I go to functional, I got 740,000 here instead of 750,000 here. Okay. So now I've taken $1 million, put it in, took $1 million, took it out. Now I'm going to hit post. And I'm going to close. I'll just cancel that. And now when I go back to my summary now, and I look at my account, there's the million going, 750. I have $19,000 here. And when I click on my currency, period number 4, there we are. I have $19,000 US, but I've only got $12,000 in my bank. So this number, this 1.49, if I was to divide this, right, this 1.49 is out by a huge amount. Like 12,000 Canadian should only be worth 9,000 American. So that $10,000 is a profit and loss on foreign exchange. It's happened because of the two transactions that I put through the system. The GL is still 19,000 because that's all I've posted. And as you can see, if I close this, there's my 750, there's my $10,000 that I need to get rid of. So what I want to do is I don't want to change on my currency. The objective is to not change this number because that's how much is my bank rec says that I got $12,754. Put $1 million in, took $1 million out. Okay, but it's not worth $19,000 at the end of the month. It's only worth 0.75 of this, which is about $9,000. Okay, so what we have to do is we want to do an entry which does 0 Canadian and basically $10,000 US. But we can't do that transaction. It's not possible inside GP. So what we do is we do a revaluation. So when we go to the revaluation, which is underneath your routines, it's right here. We go to revaluation and we go cash. And we pick up the Canadian dollar. And we'll pick up the current rate, which is 0.75. That's what we put in our records. So we want it to be revalued to 0.75. I'm going to click on this. I'm going to look at my segment. I'm going to pick up just the GL code that I want, account 1101 to 1101. Whoops, sorry. And we go insert. We go OK. So now when I look at this, this is a realized because it's never going to go away because that $1 million is completely gone in Canadian. So there's nothing to realize. Everything's sitting there. I'm going to print the report to look at it. And we look at this, we go current period. Actually, current year is fine. We're going to pick other year. We'll pick 27, and we're going to pick another period, and we're going to pick period 4. There we are there. And I'm going to print this just to take a look at it. This allows me to look at what it's going to do. So we go like so. We hit the screen. And there we have 12,574, 1.49, 19,000 here. 0.75 is going to post a $9,441.63 gain or loss in this case. And it's going to drive this number down to $9,600 if I was to post this. And that would then bring this average exchange rate to 0.75 from 1.49. Which is what you want to do. Now you have to do this for your accounts receivable control accounts, you have to do this for your accounts payable control accounts, and you have to do this for your bank accounts. You may also do it for other GL entries. So I'm going to post this. I'm going to bring up the cash again. I'm going to hit the post. It's going to give me a date, 043027. Like so, like this, and we go revalue. Processes it through. I'm going to close this as right now, and it can print journal entries if you want. That printout could be printed. I've turned mine off. And now when I go back to my general ledger here, I have this transaction. And you'll see here there's zeros in Canadian dollars. But when I go up to my currency, I have my $9,000. When I post this, which is what I'm going to do right now, we'll bring up the batch. And we'll post it.
We are at the end of our time. I just wanted, do you want to share any final thoughts before we go to questions?
Yep, just give me 2 seconds. Okay. And then from here, we'll just take a quick look at the summary and then I'm done. And you'll see there, oops, that was already open. Did I not post it? There we are. And then when I go into here, doesn't like my date, must have the wrong date. So, but yes, so we'll quickly jump over to the questions. Do we have any questions, first off?
Yeah, just one question. If a transaction is entered in the wrong currency, how do you correct it?
Okay, so on the current, if a transaction's been put in the wrong way and you've seen a currency in there that you shouldn't see, like for instance on mine, my summary shows only Canadian dollars. If you saw a US transaction or a Euro transaction, what you would do is you would do a reversing journal entry to a clearing account, and if that number still needed to be in your general ledger, you would assign it a Canadian or foreign exchange amount and push it through. So you would do two entries, one to reverse the in the currency that you're trying to reverse to make it go to zero. And the second one, in order, it would then give you you would put it back in like at $75 Canadian for $50 US or something like that. So that's how you would reverse that. So again, I've got, let me flip back to my screen here. So there we are. So this is the blog that's currently there. You'll get a copy of this as well. So this is fine, and that's where we go from there. So, are there any other questions?
Nope, nothing else has come in.
Okay.
Do you want to let everyone know that we do have three more Dynamics GP coffee breaks
Oh
coming
yes,
up series?
yes, yes.
Just putting in the chat here a link to our events page. And yes,
Great.
perfect. There they
Yeah.
are. So
So we
without
have
further,
three more that I'll be doing in the next 3 months. We're doing using and enabling document attach, how to attach documents to your transactions. Using workflow in GP, how to set that up at a basic level. And then we're going to do a very technical one on the maintenance of the SOP tables, which will be the method with which you can correct orphan records in sales order processing. So that's what those three are about. Look forward to seeing you all there. And thank you very much for attending.
great. Thank you, Don, for all the info today. Thanks everyone for joining us and have a great rest of your day.